You know that feeling, right? You get a new job, you're excited about the salary, and then your first paycheck hits your bank account, and it's smaller than you thought? Well, today, we're gonna deconstruct that paycheck and find out exactly where all that money is going. It's one of the most common questions out there. You see that big top-line number, your gross pay, and then you look at what you actually take home, and you just have to wonder, wait, what happened here? It's not magic, and it's definitely not a mystery. It's just a system, and we're about to make that system super clear for you. All right, let's follow the money trail. We're gonna take that journey from your gross pay, that's the total amount your employer pays you, all the way down to your net pay, which is the cash you actually get. We're gonna peel back every single layer and see exactly what's being taken out, and more importantly, why. So, first stop on our journey, the biggest piece of the pie for pretty much everyone, the federal government's share. These are mandatory, non-negotiable taxes that almost every employee in the country pays. This is always the starting point for your paycheck deductions.
Now, the first thing you gotta understand is that the federal share isn't just one tax. Nope, it's actually split into two very different categories. Over on the left, you've got your federal income tax. This is what pays for general government stuff, and it uses progressive tax brackets. So the more you make, the higher your tax rate gets. But on the right, you've got FICA taxes. These are totally different. They fund specific programs and are just a simple, flat percentage.
Let's dig into FICA a little deeper, because it's actually made of two separate parts. First up is Social Security tax. You pay 6.2% of your income, and here's the cool part, your employer has to match that with another 6.2%. That money funds things like retirement and disability benefits. Then you've got Medicare tax. You pay 1.45%, and yep, you guessed it, your employer matches that too. This is what funds health insurance for retirees. Okay, I want you to look at this number and remember it. $176,100. For 2025, this number is a really big deal when it comes to your paycheck. Why? Because this is the absolute maximum amount of your income that you have to pay Social Security tax on. That's right. Once your yearly income hits that cap, you literally stop paying the 6.2% Social Security tax for the rest of the year. Any dollar you earn above that is totally exempt. Now, what that means is that higher earners end up paying a much smaller percentage of their total income into the system. It's a key detail to understand. And this right here points out a huge difference. Unlike Social Security, Medicare doesn't have an income cap at all. That 1.45% tax gets applied to every single dollar you earn, no matter how much you make. It never stops. It's a fundamental distinction between the two FICA taxes. But hold on, the federal government isn't the only one with a claim on your paycheck. The next layer of deductions, well, it all depends on where you live and work. Let's call it the geographic factor. You see, just like the feds, most states, and sometimes even cities, have their own income taxes to pay for things like schools, roads, and police. This is huge, because it means two people could have the exact same job and the exact same salary, but end up with very different take-home pay, simply because they live in different states. Now get this, not every state even has an income tax. If you're lucky enough to live in a place like Florida, or Texas, or Nevada, you literally will not see a single dime of state income tax taken out of your paycheck. That can make a massive difference to your bottom line. And then, on the flip side, you have states like California and New York, where the top tax rates are over 10%. It just goes to show you what a huge impact your zip code can have on your personal finances. The difference is enormous. Okay, up until now, we've only been talking about mandatory taxes, the stuff you really have no control over. But now, we get to the really exciting, empowering part. The deductions that are actually powerful financial tools that you get to decide on. So how does this magic work? It's actually super simple, but it's brilliant. It starts with you choosing to contribute money straight from your gross pay before taxes are calculated. By doing that, you instantly lower your total taxable income for the year. And what does that lead to? You pay less in taxes. It's a win-win. You're saving for your future and cutting your tax bill at the same time.
And there are some really common ways to do this. Of course, there's the big one, contributing to a 401k for retirement, but it also includes things like the money you pay for your health insurance premiums, and, one of my favorites, contributing to a health savings account, or HSA. These are all choices you can make to your benefit.
Let's just pause on the HSA for a second, because this might be one of the most powerful savings tools ever created. An HSA is basically a special savings account for medical expenses. The only catch is you need to be enrolled in what's called a high deductible health plan to be eligible for one. So why is it so powerful? People talk about its triple tax advantage, and it's for real. First, the money you put in is pre-tax, so it lowers your taxes today. Second, any interest or investment gains it earns grow completely tax-free. And third, when you take money out for medical bills, those withdrawals are also tax-free. It's incredible. No other account gives you that kind of triple benefit.
All right, we have covered a ton of ground. We've talked about the mandatory federal taxes, we've looked at the geographic factor of state taxes, and we've dived into the voluntary deductions that you can control. So let's put it all together and create a final map of that journey from gross to net pay.
Think of this as your paycheck cheat sheet. At the top, you've got federal income tax and FICA. Their purpose is government and social insurance, and your control level is, well, 0. They're mandatory. Then you've got state and local taxes, also mandatory, but based on where you live. And then at the bottom, the good stuff. Your 401k, your HSA, these are for your personal savings, and you have total voluntary control.
So, there you have it. The mystery is solved. You now know exactly where the money goes between your gross pay and your take-home pay. So the final and most important question is, what are you going to do with that knowledge? Now that you can see all the levers, especially the ones you can pull, you have the power to take control and really start shaping your own financial future.